All right, so today we kind of had a scary day where, a lot of these earnings winners just aren't holding support. And that happens sometimes. This is not an exact science. A lot of you guys want it to be. You're like, hey, just buy breakouts and buy stocks right at technical support, and that's it. And then you'll be a millionaire. No, that's not how it works. Sometimes stocks, don't break out the way that you want. Sometimes stocks don't hold support the way that you want. And the key is being able to stay, okay, and maybe even make money when stocks don't do exactly what you want. That is the rules by which I live. Um, it's not as easy as you want it to be. That's not to say that it's impossible, but sometimes you go in with a thesis and it just doesn't play out. So before I take questions, let me quickly go over the charts that I'm interested in. First up is MITK, which has been an earnings winner. It's been one of the best earnings winners for me the past few days, where I bought it not on the first day after earnings, but on the second day when it broke the first day's high. The first day's high was like 408, and I bought it at 409. And I also bought it on the breakout. What did I think I added here at like 420-ish or 428, and it went all the way to 454 the next day. And I sold. I made nearly $3,000, and then I dip bought it the other day when it was holding support at 415-ish, and resold it around 440. So I made like a quarter a share. And then today I tried again, and today no dice. It couldn't hold. I mean, at first it basically tried to hold 450. Actually, I should even show yesterday if you want to get a full synopsis of what's going on here. Yesterday it touched 415 and bounced nicely back to 435. So you have a nice little 5% bounce. But today, it tried to hold 415 and then it just couldn't. And it dipped below it, and then 415 became resistance again when it tried to bounce. And that, kind of led people to think, wait a minute, this thing is broken again. This was the hottest stock for the past 3 days, and now it just can't hold its breakout. That happens in a very, very ugly market. Here's the S&P 500. In the past 2 days, we've tanked quite a bit. 2-3% on the S&P 500, and it looks like we have like this top in here. The same thing with the Nasdaq. We've gone down 2-3%, and the Dow, same kind of thing, down 2-3%. So you have to be very careful when stocks don't hold support. And I wasn't buying MITK today at 415 because I'm not an idiot. I was trying to dip by it though at 4-ish. Thinking that this longer term support at 4 would hold, and it did for a little bit, but it cracked through all the way to the 390s, and then it was holding 4 pretty much all afternoon. But then it just started to fade, and it just couldn't bounce. So if you're buying a stock for a bounce, and maybe it's barely clinging on to support, or maybe it barely breaks it. But either way, it's not doing what you want. What are you going to do? A lot of people who were in this before me, and people who were holding this stock, they just held. And they're just saying, you know what, I have a $50 loss. I can't afford to take that loss right now. And I'm like, you can always afford to take a $50 loss. Like, I don't care if your account is $100. Sometimes you have to take a loss. And too many of you guys don't want to do it because then you're like, ugh, this is so frustrating. I put my money, I put my time into this, and now it's just another loss. And you aren't really thinking about trading in the right way. Trading does not just come down to good trades and bad trades, profits and losses. It comes down to good risk management and trade management. And sometimes a small loss is best case scenario. I got out. I made like 5 cents a share after holding for like an hour or two, but which felt like an eternity for me because it just wouldn't bounce. It's I wish it were different. I wish trading, you could just always have profits, and sometimes you wouldn't have to take losses, but you do. That's why teaching trading is so important, because I'm teaching you rules that go against what you want, and they're counterintuitive, and everything in you, if someone comes up to you on the street and like, has a gun in your face and says, give me $50, you give them the $50 because, you don't care about $50 as much as you care about your life. So it's an easy choice to make. If someone is threatening you with violence or something, you're probably not going to fight back. Don't be like Bruce Wayne's parents. Learn from Bruce Wayne's parents' mistakes and don't fight back, and just give them a little money, because it's not worth it. You don't want your son to be abandoned and to grow up, in this bat cave and be really messed up in the head, even though if he does save the city, you want to protect your life. And trading in the stock market is very similar. You need to protect your account. It doesn't pay to be a hero in the stock market. Heroes don't get out alive. I know in the movies they do get out alive because they need to make sequels, and that's how Hollywood works. But in trading and in real life, there's just no point in trying to fight off criminals. Just give them a little money. It sucks, but you protect yourself and you protect your loved ones, and that's how you do it. In the stock market, it's the same thing. Even though a lot of you guys don't want to, you don't feel the gun pointed at your head. You just say, hey, I'm down on this. Let me try and give it more time. And then the worst thing is that oftentimes you do give it more time and you're rewarded with a $50 gain, and you're like, ha ha, shut up, Tim. I made $50 instead of losing $50. You suck. I'm awesome. And you learn the wrong lessons, and you keep doing that, and maybe you escape and you escape and you escape, and you have little gains. Sometimes you have like somewhat smaller or bigger losses. But then one time, when you don't cut losses quickly and the stock just completely gets annihilated and you lose like $5,000. And when that happens, I want you to think about this warning where I say cut losses quickly, sometimes even exit with a small profit if the stock isn't doing what you think. And I want you to think about this warning, because I'm warning you all. I say this pretty much every single day, but it doesn't sink into a lot of you guys. And you're trying to be a hero. You're trying to save $50, $100, $200, sometimes even $500. And you're not practicing good trading habits. When a stock doesn't do what I want, I protect. I know that's annoying. I know it's frustrating. But at the same time, you have to protect yourself, because if you don't, you might get clobbered. You might get murdered. If you look at Bruce Wayne's parents, and the whole robbery flashback, I mean, most of the time, yeah, you're going to be okay. But sometimes the gun is going to go off, and, somehow both parents are going to die. And why risk that ever? You never want to risk disaster. You never want to risk death. A small loss you can always come back from. It's frustrating. It sucks. You feel like your time and your money was not well spent. But if you trade the way that I'm trying to teach you, that is trading like a coward, cutting losses or exiting a trade when it's not working out perfectly, you are better off. You are safer, and you will never risk disaster. Never. Okay? So just think about that. Sometimes disaster is out of your hands. Sometimes, I've been trading 16 years and this hasn't happened, but theoretically, a stock could get halted and there could be just terrible news when you're long, or, if you're shorting a stock, there could be great news and the stock gets halted and it reopens and you've lost a lot of money. That's one reason never to go all in or never to use leverage. But most of the time, you get to choose when you want to cut losses or when you want to exit a trade. And I will say 99.9% of the time, students do not choose well because they don't want to take small losses. I taught 10 Trading Challenge students in person last week. That was awesome. Those of you who came, so thank you. I'm glad you got to see our new LA offices. They're pretty sweet. And if you guys are interested, anybody else, just send an email to admin@timothysykes.com for the next one. The next one will probably be in Miami, my home, in early 2016. And I love teaching in person. But number one thing that people had problems with was getting out of trades when they didn't do what was expected. And, one of my students, he actually lives in Europe, nice time zone. I think he lives in Switzerland. And, he cut losses and he lost like 20 bucks. And I gave him a $20 bill because I wanted to reward him for the $20 loss because he cut losses quickly. And, I know it's never fun to lose 20 bucks, but I wanted to show him $20 is meaningless. And in the grand scheme of things, I'm not trying to put down anybody with small accounts. I know every dollar earned is important to people. But in the grand scheme of things, in the grand scheme of your life, $20 is nothing. And if you practice good habits of getting out of trades, especially in dangerous markets, it's one thing to be a little more aggressive when the market is your friend and, the market's going up every day. It's another thing to be aggressive in year 7 of a bull market when, after a huge bounce and now the market seems to be fading pretty much every day. You kind of have to know where you are in the world. And right now, this is still a very dangerous time. It might not be, September, October dangerous, but I don't like being aggressive when the market's downtrend. And I was saying it from the very beginning of the day today. And if you look how the S&P 500 performed, it was trying to bounce and then it faded, trying to bounce all day, and then it faded into the close. This is not a healthy chart intraday of the S&P 500. So, I was already in play it safe mode from the beginning of the day. When I saw the markets down and I saw earnings winners not being able to bounce the way that I want, I am playing it very, very safe. I go into safety mode. And I encourage you to go into safety mode too. I know it's tough. But yeah, so MITK, I am out of it. I made a few hundred, but I don't even care if I lost a few hundred. The whole thing was me going in for a bounce at 4-ish. It bounced up to 410-ish, and the low was 395-ish. So I guess there was 10 cents of upside from my buy and only 5 cents of downside. So that's kind of cool. But either way, whether I made 10 cents or made 5 cents or broke even or lost 5 cents, I was wrong. It did not bounce. And so I exited pretty much at the midpoint of what could have happened, where I made like 5 cents a share. I'm not bragging about the 5 cents a share. I wasn't aiming for 5 cents a share, but the stock did not do what I wanted, so I got out. My other dip buy today was on the earnings winner HCKT. And HCKT, was this play where, you had a big spike yesterday. And this is an earnings winner that I've bought in the past too. And, it went all the way to the low 19s, but it finished in the low 18s. And, I actually almost did bought it yesterday. But I didn't want to because I was flying, so my Wi-Fi was kind of choppy, so I wasn't trying to, force any trades. That was my own situation. Sometimes you're going to have market conditions that are going to be bad and you shouldn't be aggressive. Sometimes you're going to have personal trading conditions, if you're trying to trade on a plane or a boat or a train. And those aren't going to be ideal for trading. So I didn't take any position. And I'm glad because it kept fading even more. But then when it fades, from the 19s down to the low 17s, $2 a share off its highs, and, that's pretty much where it gapped up here, what's the risk? I was buying this today in the 1740s. It had already tried to bottom here in the 1760s. It had already tried to bottom here in the 1750s. As it turned out, I did get the exact bottom on the day at 1740. And I know people are like, why are you buying there? Well, I'm buying an earnings winner that's $2 a share off of its highs. And yes, even though it downtrended, I think that it could bounce. And, I got out into one of these spikes. I think it was right here. I don't remember if it was here or here. One of these bounces I got out here at 1770-ish, and I made like 25 cents a share. Nothing huge on a $17 stock, but still, I'm dip buying an earnings winner, and as it turned out, I didn't have to. It did hit my target of 18. at the end of the day. So there was 50 cents of upside, which, is nothing huge again in this market, but it's kind of cool to be able to dip by an earnings winner and not have much risk. On both MITK and HCKT today, there just wasn't that much risk. I pretty much nailed the bottom on HCKT. I couldn't have timed it any better. And MITK, I was off by like 5 cents a share, but I got in near the day lows. So even though the market downtrended all day, because I'm buying companies that have positive news and positive breakouts recently, they're going to be stronger than other stocks. So I'll continue to dip by earnings winners, but you have to watch out. Okay, as a stock like ERII shows, this thing was using 770 as support for the past couple of days, and it just could not hold it. And it actually cracked. You can see this big red bar of sellers at the end of the day, all the way down to the 740s and 750s, because it just, here it just couldn't bounce. I wasn't buying it, any of the past few days because I got burned on this last Friday into Monday. I thought that it would bounce, and so when I'm long a stock and I'm aggressive on it and I get burned, I kind of psychologically protect myself and financially protect myself, and I don't really want to dip by that kind of play again. So I haven't been dip buying ERII, and I'm glad because you see this stock, it's holding support just barely. Those of you guys who were in the classroom in LA know that I played this video of a bouncing ball, and this is a bouncing ball, where it drops, tries to bounce, drops, tries to bounce, drops, tries to bounce, and then it falls off the ledge. It's a bouncing ball on a kitchen table, and you really have to be careful when every bounce is lower and it's barely holding on to support. So sometimes that happens. SCLN is another one. I was going to do a video lesson today on this. I just ran out of time. Today's been a crazy day. And this was an earnings winner, and today it just got clobbered. 3 out of 4 stocks follow the market. And these stocks are yes, following the market. So if the market, turns around and starts uptrending, I don't, I do believe that these stocks will bounce. But for right now, earnings winners are not really bouncing in this market, and you have to be very careful. So that's what I'm doing. Let's see. Bring on some questions, guys. Drinkman didn't like MITK. Good idea, though. Yeah, I've had success with MITK. On the initial buy at 409, on the late day buy at 428, on the dip buy again at 415. I've made like close to $5,000 on it the past 2 days or 3 days. And so I feel like I kind of know it. This is the 7th time that it tried to break 415 or 4-ish, and it finally did, and it went to 455, and now it can't hold it. Whether, is the stock really not meant to be in the 4s and it just is going to fail again, or is this stock just reacting to the overall market? I don't know. So we will see. But yeah, I don't mind if I have a scratch. I don't mind making or losing 5 cents a share when there's a possibility of me making 20 or 30 or 40 cents a share, if MITK could bounce. So you like my analogy with Bruce Wayne's parents? It's true. You got to protect against criminals, and you have to protect against big losses. They're really the same thing. And I hope that analogy does stick in your head next time you're looking at, a $50 loss or a $100 loss on a stock you thought was going to do something and it just doesn't. The stock market criminal is pointing a gun in your face. What are you going to do? Are you going to try and be a hero and, try and get away with it? And, sometimes you will. Sometimes you'll save that $50. Or sometimes, you can end up like Patrick Swayze in Ghost or Patrick Swayze in real life. And it doesn't end well, and that's bad. How stupid was he in the movie Ghost? Like, Demi Moore, when she wasn't looking freakish like she is now, she's like, just give him the money. Give Willie the money. And, Patrick Swayze fights him, and it's so stupid. And it turns into a great movie and, is beautiful, but, this real life is in the movies. It's not going to end beautifully. Like, you will get murdered or shot by the market, and your account will go to zero, and no one will care. And I'm trying to prevent that from happening. A lot of people give me a lot of crap that I make most of my money from teaching, and I say it proudly because my interests are aligned with you. I don't want you to lose all your money. I don't want you to get murdered by the market. If you do, then you have a bad taste of the market, you have a bad taste of penny stocks, and you have a bad taste with me. So it's not in my interest to give you bad advice. It's in my interest to give you the best lessons and the best rules that I know how. And, cutting losses quickly is so important. And I know it's frustrating. When I talk to people in the chat room and they're like, but $50, $100, $200 is a lot of money to me. And they think that just because I have a lot of money, they think that I don't understand. And that's just not true. Once upon a time, I had just a few $1,000s to my name. I wasn't born rich. I got this way through a lot of hard work. And, if you work hard, you can have this too. But you're going to have to learn from my weird ass analogies, and you're going to have to learn to follow the rules, even if they're counterintuitive, even if, you have to lose small amounts. In the grand scheme of your life, losing $20, $50, or $100 is meaningless. But you have to get over that fact. And, sometimes I'm wrong. Sometimes I lose. If I had lost an MITK, I still would have done it because I went in with a plan. I had, a good track record recently with that stock, so I feel like I know the price action. And as it turned out, I bought within, 5 cents of the day low. And, it just barely bounced. HCKT, I bought within like 10 cents of the day low, and it bounced, 50 cents a share. So if you use the risk reward of how the stocks actually ended up, you can go in with a plan of like, okay, I think that there's 50 cents of upside and 5 cents of downside or whatever. But how does the stock actually do compared to your plans? Well, even though I sold HCKT early, it did go up 50 cents a share from my buy. So there's 50 cents of upside and like 7 cents of downside. So roughly 8-to-1 risk reward. That is fantastic. In a down market, that downtrended all day. But HCKT was so oversold when I bought it that it even uptrended against the market. MITK, as I said, had roughly 10 cents of upside from my buy and 5 cents of downside. So 2-to-1 risk reward. Not great, not bad. But, that's probably why I made, it's actually kind of interesting. And you could go even another step and you could say, okay, what was the upside from my buy and how much of that upside did I actually collect? And what's typical for me is to collect roughly a third, sometimes a quarter, and at best like half of the upside. If I make $1 a share on a stock, like I was shorting AVXL last week, and I made like $1 a share on my short, and it dropped like $3 a share. So I collected at the time, 1/3 of the potential profits. Most of my big profits last year, I had two $70,000 profits within a few days of each other. And if you look at the one where I made money on the long on EKSO, had I waited another hour, my profits would have been double. Where I was shorting this pump and dump CNTO, had I waited another day, it would have been double. Had I waited 2 more days, it would have been triple. Had I waited 3 days, it would have been quadruple. So even on my biggest trades, in my first $100,000 profit day in college, when I made 100,000 plus in a day, had I waited until the next day, it would have been 200,000 plus. So I want you to see that even when I have my single best days ever, I'm only collecting a third or a half of the potential profits. It's not like my biggest profits are where I somehow magically time everything perfectly versus most trades where I don't. My biggest trades are when I'm just dead on right about a stock and I still don't time it perfectly. Very rarely will you ever see me collect, if I make $1 a share, where I'm going to collect the vast majority. Usually I am very imperfect, and I find that almost every other millionaire trader is the same way. So if you look at, okay, there's 7 or 8 times the risk reward on my HCKT buy today, where there was, like, call it 50 cents of upside, I made roughly 25 cents a share. I collected half. That's a good trade for me. In MITK, there was roughly 10 cents of upside for my buy over a few hours, and I made 5 cents, so I collected half. So, today I made nearly $2,000, not because I was, so great, just because I picked 2 stocks that had, decent, if not great, upside over several hours from when I bought, and I collected a small portion of that upside with very limited risk. That is the definition of successful trading. And I know it might sound weird. I know you guys want to trade stocks like HART and SPHS because they're so fast moving and they're such low price plays. They don't fit my framework very well. They're not earnings winners. They're very choppy. It's very difficult for me to assess the risk reward. So I just stay away. Sometimes I play those fast moving stocks like AVXL, but I just prefer, safer, slower moving stocks. So, let's see. Wolf says, if I may ask, sir, will you say you force a trade a little on MITK considering how meticulous you are? I've had such good trades on it and profits on it the past 2 or 3 days. It's not as volatile, but people said I shouldn't have been dip buying it the other day at 415, and it went to 450. So that's a nice 10% bounce, and with no news, mind you. So I'm more prone to trade stocks where I've made money on them recently because I feel like I know the pattern, I know the play a little bit. I would do MITK again. Again, it's very low risk. MITK was hanging around 435, 440. So I'm buying it at 4. I'm buying it on a 10% discount today. I wasn't, I would say I would have forced the trade if I was buying it right at 415, going in thinking, oh, it has to hold 415. I was buying it at 4, and I thought that I was taking advantage of the people who were buying it at 415, and then they were selling because it wasn't holding 415. So I like the idea of, obviously I would have preferred it to hold 415, but I like the idea of buying into other people panic selling. And, whether the breakout was 4 or 415, it has a history of bouncing. So I would do that trade over again. I don't mind it. Jay Timeless says, I'm guilty for not cutting bad trades. Learning is good. I don't want to die in this business. Good. Mauricio loves my analogies. Thank you. JTW, this is a very good line. You can't win if you don't bet, and you can't bet if you lose all your chips. Correct. I know it takes a while to absorb, Drinkman, and I know that a lot of the lessons that I teach are counterintuitive and they're just weird. They're funny. Like, why am I preaching, why is it a good thing to be a coward trader? Coward in our society is a very negative term, but I use it in a very positive way for trading. You just have to be careful. Yeah, exactly. Flock stock, Indiana Jones. He chose poorly with, what was that? Indiana Jones in The Last Crusade, where the Nazi guy drinks out of the cup and like his head turns into a claymation skull. And the knight is like, he chose poorly. You don't want to die. You don't want your account to die. So always, always, always guard against risk and disaster. Again, if you're interested in live trading with me, send an email to admin@timothysykes.com. We only do it a few days a year just because, it's a small group. Organizing it is a bitch. It takes out all my energy to, I'm just literally talking. It's kind of like this webinar, but all day long. And I'm, going over to students' screens and showing them specific things. And the next time we have one, we should have stocks to trade live. So I'm sure I'll give a tutorial of how that works because stocks to trade is my baby. I gave my programmers nearly 200 things to do for the new version. So, And we have special guests. It depends everyone's schedule, but this time we had Connor, who is our special guest trader. He turned 10,000 into nearly 400,000 now. And at the last Miami meetup, we had Mark Crook, who's up nearly 500,000. And sometimes in the past, Superman has joined us. One of these times, we're going to get Michael Good and Tim Grattani and Tim Bowen. So it just depends on the schedule. But we usually try to have a surprise guest trader so that you understand that it's not just me who's profiting from these patterns. There's more than a few people who have gotten it. Jay Timeless says, when the market is down, would you short more rather than buy? I like to short pump and dumps, but I don't know. I've been doing very well on my buys this year. I opened my E-Trade account February 1st, and now here we are, November 12th, so 9.5 months later, my baby has grown up. I started with 30,000. I'm nearly at 150,000. So basically, I've grown my E-Trade account 5 times over in 9 months, which is pretty cool. And that has mostly been through buying. So even if the market is down, we're still in an overall bull market. I'm just saying on days like today, you have to be more careful on your longs. And you will see that when the market is down like it is today, I exit my longs more carefully. It's not just about shorts and longs. It's about, how aggressive do you want to be? I'll take smaller positions if I'm scared, or cut losses quicker, or exit trades quicker. I'm just trading, much more conservative in the back of my mind, thinking, you know what, not everything is bouncing the way it should. When we were doing live trading in Miami on that Friday last week, it was freaking insane. Or in LA last week, I don't even know where I am anymore. It was insane how many earnings plays were running that day. What did we count? 7 or 8 different plays, and all of them were, or actually no, there were 9 plays that were up $1 a share from the market open, and these are 4, 5, 6, 7, 8, $10 stocks. So we're talking 10, 20, 30% moves from the market open. They just kept running, like you really almost could not miss. And I think I did miss. I think out of those 9 stocks, I played 2 of them. CSTM I correctly dip bought, but it kept fading a little bit, and I actually had to cut losses, and then it spiked to $1.30. CSTM, by the way, today is an earnings winner that is spiking. This happens, This earnings winner just kept running, and then it consolidated for 3 days, and now you have another run. So CSTM has proven several times. I was dip buying it right in here at 670 or 675, and I got out at like 675, and it went down to the 650s, and I was happy, and then it went to the 8s, and then it consolidated again in the 7s, and now it's back in the 8s. So this is ideally what an earnings winner does. It spikes up. Oh, actually, let me go to 7 days. Here was the initial earnings win right here when it was a $5 stock. And it kind of curls up. It spikes and then curls. You can buy the breakout here at 586 and it goes to 686. Then it comes down. You can buy the breakout 686 all the way to 760. Then buy the dip like I did. I was just off a little bit. And then buy the dip again. Earnings winners you can buy multiple times. It's not just about buying it once. Let's see. Would I short more when the market is up? Again, so, even though the market is up doesn't mean that I'm just going to short more. In a bull market, it's very scary to short. So when I have been shorting, I've been very, very cautious. In a bear market, you'll see me get more aggressive on my shorts. I can't wait for that. In a bear market, there's a lot more stocks to short, but you have to be a lot more careful because junk can fly for several days or several weeks or even several months. And you really have to be careful. I know a lot of people that were building their AVXL shorts way too early, and they were down $2, $3, $4, $5 a share, and now they're up $1 or $2 a share, but that's terrible risk reward. So you just have to be careful in bull markets like this about shorting too soon. let's see. What will be a different buy of a $5 stock for you ideally? It just depends on what the news is and what the plays are. I don't look for plays ahead of time. I know a lot of you guys are looking like what's a good play, what's good earnings. I actually wanted to make my video lesson today about DGLY. I guess I'll try and do that later tonight. Um, and DGLY, had this huge spike ahead of earnings. There was an analyst who came out and is like assuring everybody they're going to be profitable. And then sure enough, they have a loss, and the analyst is, exposed as a bullshit artist. And it comes down here, and, it turns out he was dead wrong. So don't try to guess earnings. I mean, he put his name on the line, and that's his job to, know what a business is doing. And he couldn't have been more wrong. How long does earnings season last for? A few weeks, but it happens 4 times a year. So there's a lot of earnings season, especially because these earnings plays, I'm not always just interested in the earnings date like most people. I'm interested in finding earnings winners and then trading them for several days or several weeks, after they report earnings. If you remember MEET, I was buying this. Sorry, I have some hair in my mouth. I was buying this, what was this? A month ago in October when they reported earnings. I was buying it in the 180s and 190s. And this has just kept going now ever since this initial earnings win. And, that's pretty impressive for this stock to just keep going. This is a stock that's never really held its gains. And here it is, spiking for a month after earnings. So the first day after earnings is not the end all. RITT, I was buying it in the 150s right here on earnings. And, I was buying it on what day? September 29th. And here we are a month later, and it's hitting $2 a share. So an earnings winner can spike for several weeks or even a month later. If you were to create a checklist of criteria to look for before going long and short a stock, what would be on those lists? Jay Campo, that would be on my How to Make Millions DVD specifically. And I also have an email, a video, what is it? 7-step program for traders. Timothy Sykes. You'll be surprised at how many videos I have. Here's a checklist. So today was the first. Here's a checklist of 7 things to look for before you trade a stock. Find a volatile stock. Step number 1. You want to find the most volatile plays. Step number 2. Determine if the pattern catalyst means it should go up or down big. If it's an earnings winner, then yeah, theoretically it should run for several days or weeks or even a month. If it's a pump and dump, the promotion will end sooner than later, and it will probably be pretty good to short. Number 3, most trade setups are non-tradable due to risk and uncertainty. So no matter how much you want to trade, the catalyst or the news or the setup just isn't there.
A little less. I was a little busy with roughly a dozen students.
And if the setup is there, determine the risk reward. What is the upside? What is the downside?
I realized that a lot of you guys
ideally there is 3 to 4 to 1 times the amount of reward versus risk. Like today,
what is a good stock?
there's 7 or 8 to 1 risk reward
necessarily what's
on HCKT
in trading.
And 2 to 1 risk reward on MITK.
I just put together off the top of my head.
Obviously, you don't know the exact risk reward going into a trade because I'm determining how the stock traded at the end of the day, and I'm seeing, okay, here was the upside, here was the downside. That was the actual risk reward. But when I go into a trade, I try and estimate, and I try and say, on MITK, I thought that it could bounce 20 to 40 cents. As it turned out, it could only bounce 10 cents. So I was totally wrong about the upside, but you can try and guess. Number 6, stick to risk reward ratio. Stick to it. If you're proven wrong while you're in the trade, and
It's
you
okay
say,
to make
okay, there's
mistakes.
only 10 cents of
Even after
downside,
trading
and
15 years, I still make
you're all of a sudden
mistakes. I
down
can do
20
better.
cents a share on the
Number two,
stock, your
determine if
risk
the
reward
pattern
ratio
slash
in your plan
catalyst
is
means it should
busted.
go
Get
up
out.
big or down big.
And
This I
you
like to
can't
keep
get
very,
losses.
very
You can't
simple.
let
So if you saw today, I'm shorting
Echo,
two
shoot.
latent pumps, IFAN and
Sorry,
NN.
I should have paused that. Thanks, Ben. Could you guys hear me at all? Oh no. No, you couldn't hear me. All right, let me do that all over again. Sorry about that. I totally forgot. Let me go back to the question. Here is the checklist. This is a 7-step program. Let me actually link this video so you can watch it on your own. But this was for Jay Campo, who asked me for a checklist or criteria to look for. And I did this video roughly a year ago. So number one, find a volatile stock. You want the stock to be moving. I don't care about penny stocks that don't move. That's how you grow your account fast, by finding stocks that move. And that way, even if you're wrong about the risk reward or how it's going to go, you can still capture a small part of the volatility. Number two, determine if the pattern catalyst means it should go up or down big. If it's an earnings winner, like MEET, RITT, MITK, it can spike for several days, several weeks, sometimes even several months. If it's a pump and dump, where it's promoted by a newsletter or a website, and they're sending out email blasts or they're buying Google ads, those are temporary catalysts, because once the promotion money ends and runs out, the stock will usually fall out of bed. Number three, most trade setups are non-tradable due to risk and uncertainty. Like a stock like HART and SPHS, where you have these biotech movers, I can't properly judge risk reward, so I just stay away. I know you guys love it. I know you love playing the volatility. I know that degenerate gamblers and addicts everywhere love that, and I trade much more boring stocks, and that sucks. But I don't like risk and uncertainty. Number four, if the setup is worthy, determine the risk reward. And this should be, I actually should say, estimate the risk reward, because you never know. You say, okay, I'm going to buy this stock. I think that there's 50 cents of upside and 10 cents of downside, 5-to-1 risk reward. I think that there's 40 cents of upside and 20 cents of downside. That would be 2-to-1. You just divide the reward by the risk. You can only estimate it. Ideally, there's 3 or 4-to-1 times the amount of reward versus the risk. Today, on HCKT, there turned out to be roughly 55 cents of upside from my buy and 5 cents of downside. So, or like 53 to 6 or 7. It's roughly 8 times reward versus risk on my HCKT buy. So even though I don't like buying $17 stocks, I can't ignore that kind of risk reward. And MITK, I thought that there would be 20 to 40 cents a share of upside on the bounce. As it turned out, it only bounced 10 cents from my entry. So I greatly overestimated how much it could bounce, and that was my bad. But there was still 2-to-1 risk reward on MITK, so it wasn't too bad. Number 6, stick to the risk reward ratio. Don't let losses get out of control. If you say, okay, there's only 10 cents of downside for my entry, and all of a sudden you're down 20 cents on your entry, you're not sticking to your risk reward. You can only estimate risk reward. You're not in control of that. What you are in control of is sticking to the risk reward. So if you say that there's only 10 cents a share of risk and you're down 20 cents, you're not sticking to the plan. So sometimes you have to get out to stick to the plan. And sometimes, you don't have to stick to the plan. Like on HCKT, even though I turned out to be dead right that there was 50 cents of upside, I didn't like that the market kept downtrending And, because I don't know the future, I didn't know that HCKT was going to go up 50 cents from my buy alert today. I just knew that I was up roughly half my expectation and the market was downtrending overall. So I was like, yeah, screw it. I'm going to break my own risk reward setup and I'm going to take half my profits right now, or take all profits, but take half of what I wanted, and lock in, a solid profit, just because I want to protect myself against this overall market. And as it turned out, I was right about the market and wrong about HCKT. The market kept downtrending, which I was afraid of, but HCKT actually uptrended. So I probably, played it a little too safe. But there's nothing wrong with playing it a little too safe. And number 7, profit more often than you lose, and the dollar profits should be bigger than your dollar losses. It's very difficult to lose money. I have these funny critics. They're like, I know people who've lost everything following your stuff. And I'm like, how do you lose everything if you cut losses quickly? And the truth is they don't. They either break the rules, which is fine because at least then they learn the value of the rules, or these, fake critics are just lying, of which there are many. Some people like Dingbat472. I'm like, tell me your real name, tell me your friend's name, who lost this money, and I will personally email them, I will personally call them, and we'll get to the bottom of this. And then there's silence. And that's the beauty of being fully transparent and real, where I call out bullshit and lies and, fakers, because I know what I teach are very important rules. There's absolutely no way to do worse on a trade if you follow the rules that I teach. There's very easy to do worse on a trade if you break the rules. There was one guy on Twitter today and he was like, oh, I don't want to pay for your program. And I'm like, okay, well, you will find out over time that the market's program is much more expensive than my program. And if you want to learn the lessons and learn these rules that I've learned, and you want to learn them on your own, sure, be my guest. They'll probably take you 10, 15, maybe 20 years to learn, and it might cost you $50, $100, maybe $200,000 in losses or, missed opportunities, millions of missed opportunities. I think that there's a good fair value trade with me teaching lessons that I've learned, and you can feel free to ignore them if you want. Many people do, but in the end, I think that you'll realize that these lessons are pretty good. So I hope that was a good enough answer for you, Jay Campo. There's my checklist. Best Bob Star says there are several earnings winners and all of these have potential. What is your selection in order to appreciate one earnings or another? I want the chart pattern to be perfect. So I want it to be a multi-month breakout. BCEI, if you look at the 90-day chart, this is Boyd, Charlie, Edward, Indigo, topped out right here at like 845 and 820-ish back in August. And then it topped out here at 830-ish late August. And then it topped out here at 830-ish in October. When it broke 830-ish, that was a potential buy. This was last Friday. And it went all the way to 960. So you had a nice dollar of upside. I like that there were clear, definitive tops here, and you could tell that it was a clear breakout. But now it is faded because this is an energy play, and I don't really like energy plays, so I didn't even trade this. MITK I liked because it was such a clean, clear breakout over the past 2 years. It tried to break 415 back in last September. It tried to break 410, 415-ish. In last November. Then it tried to break 4 here in January. And then it tried multiple times in June to break 4-ish. And then the top here again was 415, 420-ish in July. This was the first time that it could break it. So this was a clear cut breakout, even though it turned out to only go to 455. And now it's actually back below. Very similar to meat, which I was buying it in the 190s, 180s, even though there was resistance here at 220 and 220, and that's probably why I sold it, in the 190s and low twos, because I was buying it early before it had broken out. So that was my bad, even though, obviously it's I was more right buying it at 190 than somebody who bought it at 210. Someone who buys it at 210 and 220, they have a nice technical breakout to base their trades on. I was just dip buying it because I thought that it could touch 220. I didn't fully expect it to be able to break out of 220. So look back at recent support and resistance and try and judge your trades based on that. You know, ERII was a clear-cut winner from 3 years ago, and the resistance was right here at 770, 775, which, if you remember, it put up quite a fight for several days, and then when it blew through that, it went all the way to the nines. And again, even though it is failing to hold that now, I blame the overall market for that failure. The same thing with all those other stocks. So if you have a stock that's bumping up against resistance and it looks like it can, and then it does, that doesn't necessarily mean that it has to hold it on the way down, as all of these stocks have proven. But as all these stocks have proven, when it's getting close to that multi-month, multi-year resistance and it breaks through, you want to be long. Let's see. Bronco Trader says there's a YouTube supercut of Batman's parents dying. They're all similar, just like every time you get stubborn and take a huge loss. Yeah, I mean, Batman's parents, they should have survived. The stupid dad or the mom, I don't know who did it. I think the robber pushed the mom and the dad got, offended and tried to take down the robber. And then somehow the robber shot both of them. It's just stupid. Give the robber what he wants. Your pearls or whatever. Just little losses. I mean, they're billionaires. They ruined everything because of their stupid temper. I don't know. Let's see. Is there a list of vocabs that you would use and the definition of the word such as dip buy? What is dip buy? Yes, Kenson. That is in my penny stocking DVD. Watch it. Memorize it. I did a whole video vocab. Also, Tim Raw has a video vocab. And how to make millions. Thank you. Do you see any potential Friday short squeezes? To tell you the truth, I haven't even looked at what I'm going to look at for Friday. I was trying to just catch up because I was in New York for a few days for the Victoria's Secret fashion show, and I just got so far behind on emails. So I haven't even had time to really look for plays tomorrow. In this market, I wouldn't suspect that there are that many great potential short squeezes. This is a very bad market right now, and we're 7 years into a bull market. So I wouldn't expect anything big tomorrow. Last Friday we had a lot of runners, but the market was bouncing nicely, and now the overall market is downtrending. So I'm probably going to stay in protect mode. Protect tomorrow. And CSTM was a good earnings winner today. This has a really nasty overall chart and big time resistance here in the high eights. So now that it's in the low eights, I don't want to risk it. I don't want to buy it, and that's it. I'm not going to chase in this market. Question: have you met Ty Lopez? Yeah, I met him the other night. Nice guy. Let's see. What are some indicators you could see that lead you to believe that there could be a short squeeze? If you go on Profitly, this is the cool thing. Profitly, I don't know if you guys realize this. We have user content, which you guys should be using, and more of you guys are, where you can post your own blog posts, you can post your own videos, and your own watch list to help you. So you can look back. This should be your full-on trading diary. But on video lessons, I don't know if you realize this. Let me go to some video lessons. You can see tags under every single video lesson, whether it's earnings or buying dips, morning spikes. The question was short squeeze. Here, if you click on this tag short squeeze, you get all of the video lessons for, tagged short squeeze. And these are all videos that go over different short squeezes. So you guys have it at your fingertips. You just have to dig. And many of you guys don't want to. Let's see. By the way, you know Ronald James from LSU. I had physics with him on junior year. I have no idea. There's so many people who claim to know me, and it's getting kind of crazy. But that's the consequence of blowing up on social media. It's a good thing. Jay Timeless says, Tim, are you still following the rule of cutting losses at 3 to 5% and on the reward 10 to 20%? I mean, it's different for every play. I try and just choose the good risk reward. Usually I try and make 50 cents a share on any play, but on MITK it's not that volatile, so I reduce my expectations. And in markets like this, I'm just not going to hold for that long. I'm not going to risk it. Yes, stocks to trade. The beta should be ready November 15th. So if you're interested in stocks to trade, send an email to admin@timothysykes.com. If you already have, I'm sure you're already on some lists. Trust me, I wanted to start ASAP, but it takes a little while. Let's see. Wolf says, I think you should start thinking of your other students around the world so they can also take advantage of your live training. I know you work so hard, but it'll be worth it. Wolf, that's why I had a Europe meetup a few weeks ago in Madrid. I don't know. I think you're in Asia. But yeah, I mean, wherever I am, I try and travel and I try and do meetups wherever. I don't know the next time I'm going to be in Asia, but I probably should have an Asian meetup eventually, and we'll start work at like midnight or 1 or 2 in the morning, and it'll be messed up. Let's see. Mansur says, I made $700 paper trading today on SPHS. I'm on Disc 9. I've had to make millions. Awesome, by the way. Thank you. What advice do you have to stay focused when in chat rooms? I find all the tickers hard to follow. I mean, most people are talking about the same tickers. I would really only care about tickers that get mentioned often. Sometimes there's just idiots or broke people who try and bring up like a sub-penny stock, and we ban them pretty quickly. But if a ticker is mentioned with breaking news, like this company just reported earnings, or this company is up 20%. I would prioritize stocks that are big percent gainers rather than stocks that just might do something. Like, oh, this company just posted a contract. Okay, well, maybe keep watch on it in the background, but I really only care about percent gainers. Do you dig into the financials of every earnings winner? No, hell no. I don't have time for that. I just play the reaction. Jay Timeless says, DGLY, stupid of me, speculated a great earnings play. I get it now, Tim. You don't learn until you really try it. Yeah, you don't learn until you really try it or until you get burned. It's funny. Mauricio says, in 2008 to 2010, how did earnings winners go? I don't even remember. I can't even remember last year. But go and look at my early video lessons. That's why I categorize everything. And I was teaching back then. You can go and look at my blog posts. There's 8,000 blog posts on timothysykes.com. It varies every year. But 2008, 2010, I mean, earnings winners have run quite consistently pretty much every year. Likens to Trade says, I would like to see or know what preferences are set on your eTrade Pro platform. Yeah, I'll do a whole video lesson on that one of these days. Let's see. But basically, I'm just watching, to sum it up. I have my watch list on the left-hand side here. I have a chart, and I watch the level 2. So it's 3 simple components. That's it. I keep it very simple. Let's see. When promoters send out emails. Hey, baby, how you doing? When promoters send out emails, how much compensation should I be looking for? The more the better. You want there to be a lot of compensation, a lot of pumping, so that the stock theoretically goes higher. But sometimes, a lot of these plays, you have high compensation, but the stock goes nowhere because the insiders are just selling as much as they can. So you want to see high compensation and you want to see a big percent gain to make it a worthy short. Mauricio says, what you did for Ewan was amazing. What's your favorite charity to give to? Yeah, I mean, I love Make-A-Wish. I've been involved with them one way or the other since I was in college. I was actually in a philanthropy class in college, which inspired me to start my own charity while I was in college. And I also did a little I don't know what the word is, a private study, I guess, with Make-A-Wish, and I would go into the office a few times a week, and I was, tasked at handling some of the wishes, making sure that they happened. Like I went to Best Buy with this one kid at like 6 in the morning, and he picked out all these video games. I went to the Super Bowl and got these kids on the field when it was in New Orleans. Very cool. I love Make-A-Wish, and I love showing people that, even a little positivity, whether it's a video game or, like with you, and it's a life-changing device where he can finally communicate with his family. It's all positivity in a very unfortunate situation. And we need more positivity and we need it to, really spread. It's very easy to get negative in today's society and in the world around us. And I think every bit of positivity helps, especially when, you have someone in your family or someone who is sick. There's nothing worse than that. And, to bring a little bit of joy to a family that's like in hell, I think we should do more of that. So I love that. But yeah, Pencils for Promise. I know Adam Braun, very good charity. JTW says, can you show us how you calculate risk? Yeah, I'm always looking, what is the potential risk? What is the potential downside? With MITK, I'm buying it at 401. I know that 4 or 415-ish is going to be theoretically support, is down from 440. It should hold on to that. ERII, should hold on to 770, 780-ish. And so that acts as support. What was the play? The other one, I can't even think. HCKT, when I was dip buying this today, it had gapped up from basically 1730-ish the day before. So that was my risk. And as it turned out, 1730, 1740 held. So that was my risk when I was buying it in the 1740s, in 1750-ish. You're just looking at recent lows and using that as support. And it's not an exact science. MITK, I'm buying it at 401, 402. I don't know if it's going to hold 4 or 399, but I think it'll hold around 4-ish. And it did for, pretty much all day. So I didn't even need to get out of MITK. I was just playing today safe. Ultra safe, because I don't know what's going to happen in this market this late in a bull market. Tim, can I use this image on my homepage to advertise profitably? Sure. Use it up. Let's see. Ninja was helping JTW with the downside versus upside. Thank you, Ninja. I love it when you guys, help out too. We're a community. I try and work as hard as I can, but sometimes, my crazy schedule or my life or, my travel gets in the way. Sometimes I'm sick. So if you can help anybody else out, I'm not telling you to tell some newbie to lure them in and buy a stock that you're in. I'm telling you to try and pass down whatever you've learned from me or Michael Good or Tim Grattani or Mark Crook, or from the market, and just try and help. That's what some of you guys have asked me. What is this karma all about? You see this little heart where you can give karma. You can give karma to anybody. In the chat room, whenever anybody says something, you can give karma, and it's basically the equivalent of like a Facebook like, but it's called karma because I think that it's more than just a like. Like you get better karma if you help people in the community. I feel very honored and privileged to be your teacher, but at the same time, there's only so much I can do. I get hundreds of messages and thousands of emails a day. I can't keep up sometimes. So if you guys help me out, I really appreciate it. And, that's how the community gets stronger. We're all in this together. It's not like trader versus trader where only one of us gets rich and everyone else goes broke. That's why I'm proud to have several millionaire students and several teachers in this trading challenge. I don't mind when Tim Grittani goes short a stock that I'm long, or I'm short a stock that Michael Good is long. We all see the market slightly differently, and we have different ideas, but we're trying to trade transparently, and you guys can tune in, and like no time in history before, I think this is the best time, and these are the best tools ever to really get educated without having to risk a lot of money or lose a lot of money in the process. Dustin says, can contract winners run like earnings for days or weeks, or does it get priced in? Dustin, I go over this in my How to Make Millions DVD. You should be watching that. But earnings winners tend to run more because it's, earnings, it's the whole quarter. So it's the whole business. And that's more meaningful than one contract, which it might be a big or small contract, but it's just one thing. It's not the whole business. So earnings are, I think, more impactful. Dustin says, do you ever dip buy a stock below a key resistance level and wait for a breakout? Hell no. I definitely do not. I want to see a breakout first. Even MITK, when I was buying it at 409 before it broke 415, it had still broken the previous day's high of 408. So I am very, very careful about buying, breakouts. And at MITK, sometimes I do buy close to a breakout, or like right after a breakout. But, I'm trying to alert you guys in real time so that you can see how the breakout works. Because oftentimes the breakout, especially if you buy anything like in the market open and there's breaking news, it can come and go very, very quickly. So I actually prefer buying on dips. MITK, I did buy it at 509, and then I think I added at like 519 and then sold. And, I made more money dip buying it the next day or 2 days later when it was back at 415 and holding that dip level. So I prefer seeing a big breakout and then buying on the dip, rather than trying to catch the initial breakout, which is often fast, and sometimes, you miss it, and sometimes, it just goes too fast. Like ERII, I was buying that at 819 on the breakout, and it went to 950, but it was so quick, and it just never spiked again after that initial spike. So sometimes you're going to get stocks that have that initial breakout, and then they come back to the breakout level and then they spike again. Sometimes you only get the initial breakout. Sometimes the breakout fails. There's not one rule to go for all of them. Let's see. Does the How to Make Millions come with being part of the challenge? No, I'm sorry. The How to Make Millions DVD is all for charity. So legally, we cannot actually include it for anything. We're trying to work on that, but as of right now, it is an accounting nightmare. So go to howtomakemillions.com. It's only $300. It all goes to charity. With a lot of your guys' help, we've raised nearly $1 million for charity, which is awesome. So a lot of Make-A-Wishes are going to be happening. It's kind of cool. How was the fashion show? I'll have a whole write-up on that when I have time. Right now, I got to focus on plays, but it was a pretty cool experience. Rot Siv says we got to be more short bias on this market. Maybe. I don't know about that. it's tough. Let's see. Tim, iPhone gapped down on day 2 in this dangerous market. Would you only suggest dip buying and not trying to buy it in the last minutes? I mean, each play is differently. iPhone, I really, really wanted it to break 2 that first day, and it just couldn't. And then, it never even got close to 2 again. So, iPhone doesn't have a good long-term chart, though, so it's tough. When will you give a webinar on stocks to trade? When it's ready. Trust me. We're going to have a lot of information shortly, but it's got to be ready first. Like InstaTrade says, what are key signs of a random stock being a blatant pump and dump? There needs to be a ton of mailers, a ton of promotion. There's not going to be random stocks. There's going to be stocks that are heavily manipulated. Go watch these videos in this blog post, Timley/Sykes Trades, and you will see several blatant pump and dumps. Let's see. CB951 says, I've been studying a lot and I feel pretty confident to start trading soon. Do you recommend paper trading? Paper trading, I don't think you get the same emotion when there's no money at risk or in play. So I'd highly encourage you to open a small account and just trade with small amounts, even buying or shorting 100 shares, just so you can get the feeling, the psychological feeling of how it feels to, ride a winner or to short sell and stuff like that. But yeah, I know a lot of people who do paper trade. I think Thinkorswim has a good paper trading application. I don't know that stuff. Kenson says, how long would you recommend a new student to wait and learn until they make their first trade? It's totally dependent on the student. Some people like to be trading on day 1. Some people like week 1, month 1, year 1. I've heard the whole, range. Mind you, Tim Grittani, who's the single most successful trader of the past 5 years, he lost rather consistently for the first few months. So whatever you do, do not have any great expectations of making all this money like right away, or even within a few weeks, or even within a few months. This is a marathon, and you have to get used to trading these weird volatile stocks and following these weird counterintuitive rules. This is weird, but weird pays. So, I do encourage you to learn, and, I think that learning by either making or losing or even, participating in a trade helps you learn dramatically. Simple Chef says, on average, what is a good range of borrow percentages on shorts? I don't even look at the borrow percentages. If I'm trying to find a stock that to short and it's a pump and dump and it's up 200, 300, 400% in a few days, you can charge me whatever bullshit fees you want. I just want to find a short and I want to, profit on the way down. And I'll worry about the fees later. I'm only holding for a few hours or a few days, so in my experience, fees have never added up. It's different if you hold longer term, and you got to ask Michael Good about that. He made $25,000 a few weeks ago, shorting AREN and holding for 2 weeks at Interactive Brokers. I don't know what his fees were, but I've never held a stock for 2 weeks. Short, that is. Tim, you should give a TED Talk. I know I should. I don't have time right now. Eventually I will. Right now I'm actually working on this thing. It's kind of cool. You guys are going to like it. wolfmillionaire.com. And I talk all about basically how to grow your Instagram following and make money on Instagram. And I think that's a huge opportunity that a lot of you guys can profit off of. If you go to wolfmillionaire.com, there's a free guide to getting started on Instagram. I'm still somewhat new. I was late to the game, but Instagram has been my most successful social network, and I think it's just great. I think there's a lot of opportunity there. I think it's very much like penny stocks, where there's a market inefficiency because there's no big brands, there's no monetization, there's no big analytics like there is on Facebook, Twitter, and LinkedIn. So I think Instagram is kind of like the Wild West, where there's a lot of opportunity to grow your following and make money, as we'll show you on Wolf Millionaire. That's my newest project. Would you consider dip buying MITK again, even though it broke through 4? Yeah, I would, but it's going to, the market's either going to have to stabilize or MITK is going to have to show that it can bounce more. Otherwise, it's just going to be like ERII or SCLN, where these earnings winners that look like they're going to hold support, just don't. And they, I don't know where the bottom is. And the longer that MITK stays below 4 or 415, the longer, it throws into question, is this really a breakout, or is this really just going to be the 7th time it fails at this key level? Starless says, is the Dean, aka Promo, dead? No, he sends a watch list every day. He hasn't been trading as much. His chat room isn't as active, but the watch list I think is actually really useful. I still read it every single day, where he talks about different pumps like EURI, and it's useful. Best Bob Star says, I'd like to teach penny stocks. What advice can you give in order to teach well like you? Sure. I think that you need to make, several $100,000 or several $1 million before you can really be a useful teacher. There's a lot of, wannabe traders where they're like, oh, I've made 5 or 10 grand, and they think that they know everything. And you don't know shit when you made so little. You have to be around for a little while or make a lot or even have lost a lot to really learn the risks of penny stocks. So become an expert, make a lot of money, and that way you got to expand. But feel free to share and post on watch lists. That's not to say that if you don't have that much experience or haven't made that much money, that your commentary and your lessons aren't useful. I think there's a lot of useful lessons for beginners that other beginners and newbies can teach each other. But to become a professional teacher, you kind of need, a lot of experience or success. Andrew found me on Instagram. Cool. So did LeShonda. And so did Wolf. Bugs Bunny found me on YouTube. Yeah, I throw my stuff out there everywhere. I'm looking for dedicated students on every social network. It's not easy. Most people just want hot picks. But I do what I can to, to try and get my stuff out there. And, again, you can either believe me or not. You can ignore my rules entirely and see how you do. Mauricio says, my friend has made a few dollars in his own chat room is shit idiotic. Yeah, most penny stocks, they're not teaching good information. Part of the reason why I got into teaching, not just to make money, but because I saw so much misinformation. When I was on Wall Street Warriors, people would say, what you're doing is illegal. Shorting penny stocks is illegal. And I was like, no, it's not. What are you talking about? And I get really pissed off. And somehow I've become defender of this, little crap industry, this little niche here. And I just try and get good information out there. And it's tough. But that's it. So does the good till close order trick still work with reserving shares on E-Trade? No, it's only on Interactive Brokers. But it does work last time I tried it. I actually have to get going. I have an interview with this podcast called Chat with Traders, which is actually really good. And I tried to reschedule, but this is the only time he can do it. But I'm glad that I answered, most of your questions. Next week, we're going to do it an extra long webinar. So, this week I wanted you guys to come prepared with 5 questions each. Some of you guys did. But next week, I want 5 good questions from each of you. And we're going to go, maybe 3 hours if we have to, until we, get every question answered. So I will see you guys in the chat room. Please, please, please trade safe tomorrow. 7-year bull market. It could come to a close at any time. Just be safe, okay? Don't expect Friday short squeezes all the time. Today's price action was very ugly. Stay safe, stay alive. There's always going to be more plays, but again, you need to have an account in order to profit from those opportunities. So don't blow up. Don't risk too much. And ask me questions on anything, ideally stock market related, but anything. And have a good, safe weekend if you're not around tomorrow. I know some of you guys like to take Friday off. So see you guys soon.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.